10-year note yield starting to take a little bit of a move lower. Today was the first day we haven't traded above 275 in 10-year note yield, going back to the 17th. And it seems the market, while it isn't making a big shift, is trying to break out of the 2-week range. It didn't do that today, but certainly looks like it's leaning that way. Not necessarily saying it's a fear trade or a flight to quality trade. But certainly treasuries are finding more favor as equities get more volatile, as the uncertainty with China grows. And there's a lot of in-between stuff here that we're watching, obviously with the Fed, that will happen later this week. So right now, when we talk about that range, we've been straddling that 275 level in 10-year note yield for about 2 weeks. Today was the first day we didn't trade above it. So we're now starting to lean towards lower yields, which typically means higher volatility. So we have higher volatility as vols go, as yields go down. We threaten to break out of the range into the great unknown, which is lower yields and volatility bid. So while it didn't bid strongly today, it stopped going down and it firmed up. And that to me suggests when you read through the tea leaves that it really is a positive for vol. So vol right now is starting to go down, maybe even inch a little bit higher. We'll continue to see that probably ahead of the Fed meeting tomorrow as well. And I think ultimately that if we do see a breakout to the downside, that vols will bid as far as yield speak goes. And lastly, let's talk about those events. Yeah, China, the trade deal. Is it going to happen? Is it not going to happen? I think the stocks are a much better barometer for that, but certainly will feed into what we see treasuries move higher and lower. So right now we're seeing yields go down. We're seeing equities go down. Obviously, that means that the certainty of a trade deal happening tomorrow or this week maybe isn't so true. Likewise, when we talk about the Fed meeting this week, they're going to have a press conference following their meeting for the first time at a non-quarterly, which is interesting. That was instituted by Mr. Powell last year, but doesn't start until tomorrow. And that will obviously give the market a whole lot of clarity about where the Fed's going. Remember, the balance sheet becomes an issue if they decide to maybe keep their balance sheet at more elevated levels than previously thought. And that's going to obviously help 10-year note treasury yields push a little bit lower. But right now, that's going to be kind of a wait and see and a key focus. And lastly, the Brexit. Yeah, we got a vote today. And yeah, things really haven't moved around much, but nothing's really changed there. And the key to that is there is no resolution yet. And the market wants resolution. Until it gets it, you're going to continue to see the pound slide. You're going to continue to see yields over here slide, given the fact that that's where you're seeing a lot of buying move out of Europe, move out of the UK, and here into the US. It's just a wait and see kind of a game, and that's going to continue, obviously, until March 29th, or if they kick it down the road another 6 months, that could happen as well. So right now, it seems to me that the Brexit, the Fed, and China are your three main talking points as we look into this week. Obviously, all will have bigger ramifications when they come to fruition, with the China talks maybe being first and Fed being first here this week, and Brexit will remain on the mind and will certainly play a role, but won't play a serious one until the end of first quarter.